Have you ever entered a perfect trade and then price reversed immediately? That happens because momentum shifts before your eyes catch it. Today I'll show you a hidden oscillator that tells you exactly where to buy and sell, and one quick confirmation that makes it reliable. And after that, I'll show you how to turn it into a complete strategy with real chart examples. So stay with me until the end. Adding the indicator. Alright, let's start from the very beginning. Open your TradingView chart. I'm using the 1 hour time frame on Euro to USD, but honestly, you can use any market. Forex, crypto, even stocks. It all works the same. And you can test it on any time frame you like. Now go to indicators and type Two Pole Oscillator. You'll see the one by Big Beluga. That's the one we are using. Once you add it, first double-click on the indicator to open its settings. Then under Style tab, make sure to enable the last plot option. This will display a thin blue line, also called the signal line. Right beside the signal line, you'll see the oscillator, which smoothly shifts between blue and purple colors. If you watch closely, the oscillator and the signal line cross over each other from time to time. Here's what happens. When the oscillator moves above the blue signal line, a buy signal appears. You'll notice a blue upward arrow on your chart confirming that signal. When the oscillator drops below the signal line, a sell signal is generated and a downward arrow appears directly on your chart. So basically, this indicator gives you signals in both windows, inside the oscillator panel and right on your main chart, making it super easy to find trade opportunities. Think of it like this. The oscillator tells you when momentum is changing direction, and the arrows make it visual, like traffic lights for trading. Pretty simple, right? And sometimes you might notice a small X mark near a signal. That just means the price went against that signal, so it's no longer valid. Understanding how it works. Now let's understand what's really happening behind the scenes. The two-pole oscillator measures momentum. That means how strong the buyers or sellers are pushing the price. But what makes this one special is that it uses something called a two-pole filter. Don't worry, no need to understand the math. Here's what it does. Most indicators like stochastic or MACD move too fast and create a lot of noise. But this oscillator smooths the data twice. So instead of random spikes, you get a clean curve that shows the real direction. That's why it reacts a little slower, and that's a good thing. It ignores the fake small moves and focuses on the true trend. When the oscillator is blue, it means buyers are stronger, bullish momentum. When it turns purple, it means sellers are in control, bearish momentum. So even if you don't look at the candles, you can already tell who's winning the battle in the market, buyers or sellers. That's what makes momentum visualization so powerful. Overbought and oversold zones. Now take a look at the right side of the indicator. You'll see some numbers. The center point is 0, that's a neutral zone. Above 0, buyers are stronger. Below 0, sellers are stronger. You'll also notice levels like 0.5, minus 0.5, and the extreme zones 1 and minus 1. These levels help us spot when the market might be overbought or oversold. Here's how it works. When the oscillator is above 0.5, the market might be overbought. Buyers may soon slow down. When it's below minus 0.5, the market might be oversold. Sellers are losing strength and buyers could step in. If it reaches 1 or minus 1, that's an extreme, often a sign of a pullback or a short-term reversal. Important tip. Don't confuse this with the signal line, the thin blue line. For overbought and oversold, only look at the oscillator color and position. The signal line is only used to generate buy or sell arrows, not to judge market extremes. Now you could trade just using these arrows and levels, but that's risky. Sometimes the oscillator gives a signal too early. So to make this setup more accurate, we are going to add one simple confirmation tool, the RSI, and that's where things get real interesting. Adding RSI as confirmation. Before we move on, a small like would be awesome. Thank you. Let's add the second indicator. Go to Indicators again, type RSI and add it to your chart. In the settings, keep the RSI length at the default 14. Then go to the Style tab. Keep only the RSI and the RSI middle band and uncheck the rest. You can also change the line color and thickness to make it easier to see on the chart. Okay, you probably already know RSI shows a strength between buyers and sellers, but here's how we'll use it. We only take a buy if RSI is above 50. We only take a sell if RSI is below 50. That means we trade with the momentum, not against it. This simple rule filters out a lot of false signals, especially when the market is ranging or choppy. So together, this combo works like this. Two-pole oscillator gives early buy and sell signals. RSI confirms the direction. If both agree, we take the trade. If not, we skip it. How to check a trade signal? So here's how we check for a trade. For a buy, first look at the two-pole oscillator. Do you see a blue upward arrow? That's our first clue. Next, check the RSI. It should be above 50, showing buyers are strong. Then look at the oscillator value. If it's in the oversold area below minus 0.5, that's even better because the market might bounce up. When all three line up, arrow up, RSI above 50, oscillator in oversold, that's a valid buy signal. For a sell, it's the opposite. Look for a purple downward arrow on the chart, RSI below 50, and the oscillator in the overbought area above 0.5. When these conditions match, arrow down, RSI below 50, oscillator overbought, that's a valid sell signal. Real market examples. Buy setup. Alright traders, let's look at the buy setup. First, see the two-pole oscillator. There is a blue arrow pointing up. That's our first hint for a buy. Next, check the RSI. It's above 50, so buyers are strong and the trend is bullish. Then look at the oscillator's value. It's below minus 0.5 in the oversold zone. That's perfect because the market may bounce up from here. So when all three line up, blue arrow, RSI above 50, oscillator in oversold, that's a valid buy signal. For risk management, we put our stop loss just below the recent swing low. And for take profit, we place it about 1.5 times the risk. As you can see, the price goes up and hits our target. Sell setup. Now let's see a sell setup. Look at the two-pole oscillator. Here is a purple arrow down. That's our first clue for a sell. Then check the RSI. It's below 50, meaning sellers are stronger and the trend is bearish. Finally, look at the oscillator. It's above 0.5 in the overbought zone. When all three line up, purple arrow, RSI below 50, oscillator in overbought, that's a valid sell signal. Stop loss goes just above the recent swing high, and take profit again about 1.5 times the risk. As you can see, the price goes down and hits our target. So that's the two-pole oscillator combined with RSI, a simple, visual, and powerful strategy you can use on any market. It shows momentum, confirms the strength, and gives you clear buy and sell signals without overcomplicating things. If this video helped you understand it better, leave a like and comment clean setup below. That tells me you want more tutorials like this. And if you haven't yet, make sure to subscribe. I will post new strategies so you can keep improving your trading step by step. Thanks for watching, and I'll see you in the next video.